Yo, what is up, guys? Welcome back to another trade recap video. So today, Monday, November 17th, although we were coming into the week without having Monday and Tuesday news, as market opened up, we ended up having 830 Empire Manufacturing Index. We have FOMC later today, as well as Trump saying something later on today. And that basically gave us a unexpected volatility spike in the market on this Monday. And one thing to also realize, today is the first day back after the government shutdown. So that's another reason why we also had a large spike in volatility today and big prices, big move in price. So coming into today, how do we draw our buys? So looking at the higher time frame first, let me delete all these drawings. You go into the 4 hour time frame and you look at what the 4 hour is presenting us. So you're looking at the 4 hour. The 4 hour is looking like we're very bearish. Currently respecting this bearish imbalance over here and creating this 4 hour chain in the state that we're still following through. Although we do have this bullish chain of state or delivery that happened over here, respecting this bearish fair value gap is a PD array that we're currently in. So respecting a bearish rejection off of that is what we're going to be looking for. Going into the 1 hour, what do we see? We see that before this move lower that we have here, these set of up close candles are created. And if we draw out our standard deviation Fibonacci levels over here, we can draw out that deviation, so we can draw out certain levels that we can expect rejections from. And if we just draw out a fair value gap here on the 1 hour, you can see that we don't even need to go to the 1 hour. We can just go scale down first and then initially look for another imbalance that we can possibly reject off of. So the 1 hour pairs the 5 minute, and the 5 minute, if we look over here, the second standard deviation aligns with this propulsion block over here, where we have order blocks and there's areas in price where we like to reject off of, as well as this undecided doji candle in price. So we want to see a possible rejection off of some area there. But what we can also do to help increase our probability in finding the right level is extending this down to the nearest bullish wick, not the bullish wick, but the nearest bullish candle, just to allow this trend to fully form. And now with that being said, we now have a new low at this level here that aligns with a 1 minute fair value gap. And that 1 minute fair value gap right over here is what we're going to expect our reversal off of. So if we draw a line out here, what do we see? 930 immediately dumps, take out that liquidity over there, and then immediately push us higher. So once we see that, and we also see a chain of state or delivery form with the 5 minute here and all the other time frames, we know that the trend has switched from bullish to bearish. Sorry, from bearish to bullish. But now also understanding that we have a new manipulation leg over here, slash chain of state or delivery leg, what we can also do is now draw out a 5 minute chain of state or delivery and our standard deviation range. And looking at our standard deviation range, what do we see? We see that this second standard deviation range aligns with another propulsion block. And this propulsion block is another one where we see reversals and just many areas in price where price likes to mitigate from. So seeing this 2.5 standard deviation be that level, we first also look for, before we even go to look for our second standard deviation, sorry, 2.5 standard deviation, we first look at the second standard deviation. But coming into price, we see that although we do begin to reject off of this area over here, we don't create any proper chain of state or delivery. Although some people may have entered off of this 432 chain of state or delivery, I didn't enter off of that. Looking at the 15 second, as the 15 second at that time was a little bit overextended, and we did not create that chain of state or delivery the way that we did on the 1 minute. So, which is why I didn't take that positioning. Which is another thing to also add to your trading. If the lower time frames or certain time frame is only showing a range of one candle, go into the next lower time frame to see whether or not that range is as probable as you would think it is. Now moving forward, after this range gets disrespected, we now move on to this 2.5 standard deviation range, which aligns with these rejection blocks, sorry, propulsion blocks. And now that we have this, we wait for a rejection off of that. We see a series of up close candles form after as we tap this level over here, this 2.5 standard deviation, and we also get a chain of state or delivery. The only reason I didn't enter this initial position over here with the rebalance is because if you're looking at this 4 hour, 10 a.m. was about to close and this 4 hour had yet to flip. So that had me somewhat indecisive about my position sizes. And with that being said, I was going to wait for a continuation of that trend to further build my bias. And looking at the 5 minute, we have a nice 5 minute chain of state or delivery that we can also have a new continuation trend off of. And waiting for that 5 minute chain of state or delivery, we get it. And we also get a rebalance into this 1 minute fair value gap created after creating that 1 minute as well as 5 minute chain of state or delivery. and pull back to that, we entered a sell over here. Stop loss is just above the imbalance, targeting 1 to 2. If I draw it out, just so I can show you guys. Entry was somewhere around over here. It was just perfectly about over there. Just above the imbalance and targeting this low that we had targeted. It's not that we were targeting a certain low, for example, but we did target this. And then I wanted to just see this break of liquidity to be my next take profit, as 1 to 2 was just near that area. And I took my profit just about over here for a 1 to 6.5. Very good trade today. Although I could have taken this first initial entry over here, I didn't, waiting for the continuation trend. And we ended up still baking on this position. Although it looks like we are in a bit of consolidation here, this is all order flow, and this is all the way price action is. All that is doing right now is possibly rebalancing into the 5-minute before making that move lower. So hopefully we see the rest of the day end bearish, and we see these lows get taken from New York AM session. But with that being said, thank you so much for watching today's video, and I'll see you guys next time.